Yeah. Yeah, I think that's like that is a great example of like you only need one big win in crypto.
Hmm.
Like
Yeah.
I think a lot of people that like come and try and make it their time horizon for a position is like 7 minutes or something. I did a poll on Twitter earlier and I said, what is responsible for your biggest gains on your portfolio and what
Mm.
is responsible for your biggest losses? And the biggest gains was just like simple spot trading majors and buying tokens, like buying smaller cap tokens. And what was responsible for the biggest losses, like over 50% was leverage trading.
Yeah.
And
Right.
I think people come in with this really short mindset of like, right, I'm late, I've got to catch up. Some people have already got billions of dollars. I've got like 2 ETH or something. The only way to catch up is to use debt because I'm not missing out on this. I'm going to borrow money and go leverage trade. And really, like Multicoin did that seed round, what, 2018 was it?
Yeah, it must have been 2018 or
2017 or
2018.
Yeah,
So it's like
2019.
it was 3 years to go from like, you know, a few million to a few like to several billion.
Yeah.
And they didn't do it. They just sat there. And I saw another thing the other day where an Ethereum Genesis wallet, someone put $1,000 into the Ethereum ICO, and then they moved a third of that into the Avalanche ICO. And in 2 trades, it went from $1,000 to 600 million. Like they did
Wow.
2 trades. They just sat on it for like 5, 6, 7 years or whatever it was.
That's amazing.
And you only need to really hit it once. You need to be right once. You don't need to be right every single day. You don't need to play every single thing. You got to be right once.
Problem is,
If you can make 10 bets and be right once, sounds easy, doesn't it?
I do think the 10 bets component of that is important because somebody else probably put $1,000 into the ETH ICO and then they rolled their 100x and they put it all into Ryblocks. I don't know what's something that went to zero. You know, like they rolled it and then it that next thing then went to zero, so they still didn't make it. And if you're not throwing a handful of like smart darts, then you can still screw it up because you can make that convicted bet and you're completely wrong. Still goes to zero, but man, you hit the one and it's like, well, suddenly that one dart is like 90% of my portfolio.
Yeah, that's what I think about. It's like making like 10 sort of high conviction, like thesis driven, I think this, and just like watching them really carefully to like figure out, are the things that I expected to happen happening, or like, am I wrong, am I right, and why? And just fucking leaving it rather than going, all right, well, I making a trade on this for the next 3 days because Axie's pumped, which means there'll be like a mimetic pump in this thing. And then I'm going to rotate the capital to DeFi on Algorand because Gary Gensler mentioned like, Algorand in a talk 7 years ago. Like you know,
Cobie's mocking
that a
me
thing?
right to my face.
that wasn't even about you. But, if it applies, then yeah.
It is one thing, you know, I don't give investment advice. I charge for it, but the one thing I will say is that diversification is really fucking powerful. Especially, I mean, it's kind of the core of venture, right? That's how venture works. Like Multicoin didn't put that much money into Solana, but the amount they did, you know, they had a portfolio of many things, and just one of them was 1,000+X, and you know, returned their fund many times over, and probably made them the best returning fund of that vintage. But the thing is, you know, if you have returns that are power law distributed, meaning that you guys are familiar with the concept of power law. If returns are power law distributed, then the optimal strategy is actually to be maximally diversified. Now, if you're doing venture, that's kind of hard, right? It's hard to like meet all these entrepreneurs and like put all of them in your portfolio and negotiate all these deals. Like it's actually not easy to do. In liquid markets, it's really easy. It's really easy to have an extremely diversified portfolio. So one really easy thing is like trade less and diversify more.
Now, diversification, though, it's got to be important on when you do that, because if you diversify when it's
at the top,
then the correlation is like 1, and everything goes down 99%. But if you
to be clear, I'm not saying diversify to mitigate losses, because you're right, everything is correlated, especially in massive up and down movements.
Yeah.
I'm saying diversification to increase your returns.
Right. Yeah.
So there's diversification in traditional markets, which actually mitigates risk. Diversification in crypto can only somewhat mitigate risk. It does a little bit, but like not super a lot.
Yeah.
It actually amplifies returns because of the power law nature of returns.
And you talked about like your LPs, like bad instincts too, is like if you're making those diversified bets amongst great teams who are survivors of a long bear market and have these great ideas, and you're like, look, we're putting $1 million here, $1 million there, 200,000 there. And then you're like, that's those really powerful diversified bets with the power law of distribution. But man, if you like, how many funds launched in 2017 and the bear market couldn't end until like they shut down? You know, like there were lots of funds that shut down in 2018, 2019 because they couldn't survive that. They weren't preparing themselves to be able to like make the next kind of big power law bets. And I used to mock the idea of like a moon bag, you know, but now I've seen enough stuff where it's like, yeah, look, it looked amazing at $5 and now it's 500 and I'm an idiot because like I sold it all.
Yeah.
And it's just, it's incredible to see the way the cycle really works, because when it's going up, like stuff will go up so much more than you anticipate.
That's right.
And like my
venture
self wants to like get out, and I'm missing that power law escalation. Right.
Right. Venture really trains you to think that way. Like venture is all about power laws. It's all about like, look, a lot of great entrepreneurs, usually like 5 or 10 of them are going to arrive at amazing things, like the Uniswaps, the Solanas, but you know, the Avalanches, the Near protocols. And when they do, like it's always bigger than you think it's going to be. And even when you already think it's big, it gets even bigger than that. So, you know, VCs have been doing this for a long time, whether in traditional technology companies or like Google and Facebook. Like remember Facebook's IPO when it was like, you know, in single digit billions, and then now it's like a $500 billion plus company. And every time people think that something is overvalued, usually they don't understand.
They were mocked for Instagram.
That's right.
Incessantly.
That's right. They were mocked so brutally for Instagram.
Zero revenue, 1 billion. I guarantee you from my personal Twitter account, I have something where I'm comparing like something to how many Instagrams it is. And you look back at it, it's like, well, it's probably like the second most valuable singular, you know, centralized software brand in the world or something. You know, it's like, it's crazy.
And then WhatsApp on top of it. Which also was
that was like 20 billion, and people were like, you're absolute morons, you know.
Yeah.
I don't know what WhatsApp is worth today, but it's a lot.